Welcome back. You're tuned into Money Control, watching Closing Bell with me, Nandita, Khemka, and my colleague
Yatin, Mota, as always.
Yatin, a good day, good Tuesday for the market. We have, hit a record high today as well. The Nifty closing above that 24,400 mark for the first time. In fact, a good decisive move coming in on the Nifty, Yatin, after a couple of iffy sessions. So a triple-digit up move on the index, closed almost at the high point of the day, 24,040. Those are the kind of levels that we clocked in today's session. Sensex as well, almost a 400-point surge at 80,300. That level is holding on. And the good part is that the benchmarks managed to outperform the broader end of the markets today. So 0.5% gains coming in on the Nifty and Sensex, vis-a-vis 0.3% kind of gains on the Nifty mid-cap index. India VIX jumped another 5%. Yesterday as well, it was up 7%. So volatility is there at record levels, but advanced decline ratio was in favor of gainers today. Even Stevens, 1:1. That was the NSE advanced decline ratio today. AMFI data, I want to just point out that, AMFI data for the month of June came out. Equity inflows are at a record of 40,500 crore rupees for the month of June, and SIP flows as well, Yatin, continues to come in at record levels of 21,260 crore rupees or thereabouts. Sectorally, of course, it was the auto pack hands down that was driving the gains today, led by Maruti and M&M. Those two are the top movers there. Pharma, PSU banks, these are some of the pockets that did well. FMCG also extended gains. Barring the IT and energy sectors, all of the sectors are trading in the green. IT a little cautious ahead of numbers from TCS and HCL Tech later this week. Talking about individual movers on the Nifty, of course, as I mentioned, Maruti almost a 7% uptick coming in there. There has been a trigger. We'll be talking about that a little later on the show. M&M, ITC is a good 5% up in the last two sessions. Sun Pharma, Divi's, Titan, of course, managed to snap out of its string of losses among the top Nifty gainers today. On the flip side, you have ONGC, top laggard, Tata Consumer, Reliance Industries under some bit of profit taking, Shriram Finance and Bajaj Finance. But Yatin, the weather outside is good, but tea prices are soaring, and Absolutely. So are the tea stocks. What's leading to that?
So I think tea stocks, sugar stocks, and the rice stocks were in focus today. All of them moving higher in trade. So good moves coming in there. But if you look at the broader markets, the Nifty 500, we had stocks like Jubilant Ingravia as well as Gland Pharma surging by nearly 8 to 10% in trade. So good move for these pharma stocks. Apart from that, we had good moves coming in for CAMS. That stock was up 6% in trade. Chennai Petro up 6%. Welspun Corp, mind you, that stock is gained nearly 5% in trade, and so is Swan Energy, almost third day on the upper circuit. What's not doing well is the PSU pack. Yesterday after the rally, some cool off coming in there. Railtel, Ircon, RITES, RVN, and all of these railway stocks down anywhere between 4 to 5%. Other PSU stocks like BEML also saw some bit of correction, and fertilizer stocks also, the likes of Chambal Fertilizer, that also saw a 4% cut coming in. So sugar, rice and tea stocks gaining, whereas some railway PSUs witnessing some good profit taking in trade.
That's true, and railway stocks, of course, ahead of budget, they are, flying off the shelves, but today some bit of profit taking coming in there. But let's talk about some of the stocks that are on our radar this afternoon. Starting with Maruti, a 7% uptick on that stock. Of course, that's on the back of the waiving off of registration fees for hybrid vehicles by the UP government. That has triggered a very strong rally on shares of Maruti and M&M as well. Maruti, in fact, is the leading car maker when it comes to hybrid cars. Two of its brands are Grand Vitara and Invicto. Now, buyers can save up to 3 lakh rupees on Invicto and somewhere around 2 lakh crores on Grand Vitara. Now, typically the UP government charges somewhere around 8% road tax on vehicles less than 10 lakh rupees and 10% road tax on vehicles which are above 10 lakh rupees ex-showroom. But hybrid vehicles are now grouped with EVs for exemption in registration fee, and that has come as a big boost. It will lead to faster adoption of hybrid cars and increase the appeal of hybrid cars. In the UP, in fact, the state has sold somewhere around 100 strong hybrid cars in FY24 itself, and UP is a strong market when it comes to hybrid cars, right? Passenger vehicle sales in H1 have topped somewhere around 13% on a YOY basis. when it comes to this particular state. Mahindra Group as well stands to gain aside of players like Honda and Toyota, right? Because M&M has invested somewhere around 1200 crore rupees in a 150 megawatt hybrid project. So that is why you saw traction in M&M shares as well. Now Maruti is expecting hybrid cars to contribute almost a quarter or 25% of overall sales, and it expects that to come from hybrid vehicles, which is why we saw the kind of move that we saw on the share prices. Analysts are expecting other states also to follow suit and waive off registration fees when it comes to hybrid cars. Of course, this will bode well for luxury hybrids as well. And I think on Awaaz we had RC Bhargava also joining in, and he also pointed out that these moves will only support growth for auto sector, and the focus on hybrid as well as EV bodes well for the entire sector going forward, and he also expects other states to follow suit. Look at the shares of Maruti on a YTD basis. In fact, the stock is already up 25% or thereabouts, and with this policy that was actually announced in 2022 to 2023, and now it comes into effect from immediate effect. So this is something that will boost hybrid car makers, especially Maruti.
Absolutely, and the stock of Maruti 7% up, in trade. So clearly, good gains coming in for that stock. And as Nandita was mentioning, the strong move in Maruti augur well for the entire auto pack, and other states might follow suit, which might again be a booster for the entire sector. Now, shifting focus from autos to technology, and Citi has come out with a initiating coverage report on Affle India with a target of 1600 rupees per share. And after this, brokerage report, shares of Affle surged, nearly 7-8% in trade. Now, the company is all set to get leverage and better margins from the digital ad space. Obviously, there were some initial hiccups when Google did not allow third-party cookies to be, present, but that has been deferred, probably helping companies like Affle get better analytics on consumer behavior and give particular specific ads to consumers. Now, the company is well positioned to benefit from the recovery in mobile ad budgets. Also, the company's return on equity as well as M&A strategy would be something that would drive earnings from here on. In fact, Citi is expecting a sales growth of nearly 20% on a compounded rate, as well as a 400 basis points expansion, which is almost a 4% expansion in EBIT margins in the next 2 to 3 financial years. Obviously, the company's valuations, which Citi has put, is almost 48 times price to earning ratio, which is almost a 50% premium to the peer set, given the fact that this company provides a better growth opportunity moving ahead. So, Affle, those stocks were in focus today. Shares ending nearly at the day's high.
Affle India, I think, I had a chat with Karan Thorani of Ilara a few days ago on our show Stocks for the Next Innings, and he believes that this is the best play on the digital arena, for Modi 3.0, the third innings of the Modi government. But on that note, moving on to railway stocks that Yatin was pointing out, saw a fair bit of profit taking today, and Texmaco was one stock that was down somewhere around 4% or thereabouts, but not after clocking in a very strong rally over the last 1 month. The stock is up 40% just in the last 1 month, gaining traction ahead of budget, but today, of course, some bit of profit taking there. Now, Nuvama has initiated coverage with this on the stock with a buy rating, target price of 331 rupees or thereabouts. It believes that the company or the stock is seeing a remarkable rejuvenation after a tough couple of years. Surging railway capex, robust wagon ordering, as well as net cash balance sheet are some of the things that are auguring well for the company. In fact, they expect FY24 to FY27 PAT CAGR of 45% on the back of improved execution as well as margins and working capital trajectory, and that these are some of the factors that could help Texmaco to clock a 45% CAGR in terms of PAT over FY24 to FY27. Now, Texmaco Rail is seen as India's most seasoned wagon manufacturer in the private space. Wagon business, of course, has managed to roar back to form after experiencing a slump or a downturn over 2014 to 2022. Important to note that order accretion for FY23, FY24 alone was around 75% of what it saw over FY14 to FY22. So that's the kind of comeback that really the wagon business has seen. The company is also ramping up its manufacturing capacity, and it hopes to reach 1,000 wagons per month production pretty soon. It has presence in the wagon, rail EPC segments that bodes well for the company on the back of Indian Railways expansion as well as metro projects. and it also has partnerships with global players. And of course, there has been a recent fundraise of 1,000 crore rupees via QIP, because of which the balance sheet is net cash, and that bodes well. But Nuvama has also pointed out multiple triggers for re-rating: the potential rail EPC demerger, improving margins, working capital trajectory, how they're managing it, that, and a ramp up of components business. These are some of the factors that could trigger a re-rating. As I was mentioning, the stock is up 40% in the last 1 month, and the last 1 year itself the stock has jumped 3x. Yatin.
Absolutely, and railway space, it has been a dream run for the last 2.5 years. Probably some profit taking today, yes, but I think brokerages and the outlook remains buoyant, given the fact that Indian Railways is on a big capex spree, which will at least last robustly for the next 5 years or so.
Well, then those were all the stocks on our radar this afternoon. Ending the day on a happy note, at the high point of the day now. The next level to watch out for, Yatin, 25,000.
Absolutely, and we are just like almost 2 percentage points away from that target.
Yeah, and let's see whether it comes before the budget or after the budget. Of course, that's the next trigger, and of course earnings as well. But with that, it's a goodbye from me and Yatin. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates.